This is Akashvani. In the program Insights, now we bring a discussion on RBI monetary policy decisions. The participants are Jayanto Roy Chaudhary, economic analyst, and Sonu Sood, anchor.
In its 3-day bi-monthly policy meeting, the Reserve Bank of India today decided to keep its key repo rate unchanged. This is the third consecutive meeting where the key rate has been left unchanged. In his speech, RBI Governor Shaktikanta Das lauded the Indian economy for its strength and resilience amid global slowdown, but also highlighted the need for a cautious approach going forward. To discuss the various nuances of today's policy announcements by the RBI, we have with us senior economic expert Shri Jayanto Roy Chaudhary. Jayanto, a warm welcome to you from Akashvani.
Thank you, Sonu.
Jayanto, how do you see RBI's policy announcement made today? Is the decision to leave the repo rate unchanged in keeping with expectations?
Absolutely. I think most economists expected the repo rate to remain where it was, mainly because inflation rate is still running above 4%. Of course, much of it is because of food inflation, which is a seasonal factor, which is why, of course, RBI also did not raise the rates. You raise the rates when you know that the core inflation has gone up, when you realize that you need to really control a runaway inflation. But this is more a seasonal factor, which is why the RBI has decided not to raise the rates. But at the same time, RBI has decided not to lower the rates, which would have certainly given a fillip to the already expanding economy. But at the same time, if you do that, then tool that you have in your hand of controlling inflation is given away. So the RBI chose to be cautious, watchful, and yet at the same time very pragmatic by not raising the rates. This, I think, will keep the growth story for this country intact, alive. As you know, we are one of the brightest spots in the Asia-Pacific region as far as economic growth is considered. China, which is considered to be India's major economic rival in the continent, has now got recessionary expectations. So compared to that, we are in a much better, sweeter spot, so to say. And this RBI policy should underline that and actually give it some kind of stability.
Jayanto, in every policy statement, the stance of the central bank is keenly watched, whether it is accommodative or hawkish or where is it tilting. What are the indications we get about RBI's current stance from today's policy statement?
Well, Sonu, as you know, RBI has also said that there is a need to bring down inflation to below 4%. It is also talking about keeping a watch on it. It's also announced that banks will have to maintain an incremental CRR of 10% from August 12 over their existing CRR, but though their existing CRR does remain unchanged at 4.5%. So all these are a very, very cautious stand, which is what should be there from a Reserve Bank of this nature. We are a growing economy. We are showing a healthy growth trend, which the RBI would like to encourage, but at the same time, the RBI would not like inflation to become a tax on the poor, and that is why its stance has been cautious with an eye open for any inflationary trends. We must not forget that the RBI has also spoken of the global economy continuing to face challenges of inflation, geopolitical uncertainty. We all know about the Ukraine-Russian war, the extreme weather conditions which are troubling many economies, which are raising inflationary expectations in various parts of the world. So all these headwinds, though we are able to face them mainly because of the growth in our economy, are there. And that is why the RBI stance remains what it is.
So going forward, how successful you feel RBI and the government together through fiscal and monetary steps, they will be able to control the food inflation, which you spoke about, which has reared its head. Is it a seasonal phenomenon or is it likely to be long-lasting problem?
Well, it is a seasonal phenomenon. Of course, we are witnessing a situation, an abnormal situation where the tomato prices have risen to up to 200 rupees a kilo, which is absolutely abnormal. I mean, it cannot happen like that. It cannot continue. So the government has done three things. One is, of course, the credit policy, where you see this incremental CRR, which is basically to pull down inflation. Those who are big wholesalers, big suppliers of food products in the market, they will have lesser access to credit as banks will be stopped in their tracks. They will have to put in incremental credit in certain instruments. So these are measures on the monetary side. But at the same time, there are fiscal measures which have been taken by the government. There are also administrative measures which the government has taken. If you remember, the government has already announced that there will be certain vegetables are being sold at concessional rates through various outlets. Edible oils are being sold at concessional rates, again through NAFED and other various agencies. These are measures designed to cool down prices. At the same time, the government has gone in for various kinds of horticultural missions, oilseeds missions, which is very important because if you do not bring down the prices of oilseeds or of edible oil, then there will be a problem, there will be a inflationary problem which will be last longing. Because we have to remember that though food inflation is always seasonal, there is a tendency of stickiness. So prices go up, they do come down, but at the same time, they do not come down to the level where they should come down unless and until there is a glut in the market. So the glut, for instance, there was a potato glut recently, then the prices really fell. But that is another disaster because it's a disaster for the farmers who had hard-earned money into that crop. So there is another set of measures which has to be taken. Not right now, but when it did happen, many governments had to take that kind of a step. But right now, the steps needed is to see to it that there is no price stickiness, and that is being done by administrative measures as well as a combination of monetary and fiscal policies.
Jantu, today in his address, RBI Governor said that Indian financial sector has been stable and resilient as reflected in sustained growth in bank credit, low levels of non-performing assets, and adequate capital and liquidity buffers. You feel that this strength in our banking sector, that is a very important, aspect of our being the sweet spot in the world, because we see that a lot of countries are facing high debt issues and even banking sector fragilities.
Yeah, it's a chicken and egg situation, of course. The banking sector was in the doldrums earlier, if you remember a few years back, but it has certainly improved since then, partly because of a number of correctional measures which the RBI and the government ensured, and partly because our economy is now growing. So once the economy starts growing and the corporate sector starts earning money, it's easier for them to actually pay back loans, to be on time with their interest payments, which helps banks shore up their profits and their resilience. So that is what has happened, a combination of measures which has strengthened the financial sector and at the same time a growing economy which allows industry to borrow and pay back on time. There is more of lending and there is more of paying back, less of NPAs, which has been a boon for the banking and other financial sectors. And that is what we are witnessing. It's all linked with growth, frankly speaking, which is why the RBI does not want to tinker around with the growth story too much. If it can, it will try to help the growth story by cutting down interest rates, by increasing liquidity. But if there are inflationary tendencies, then of course the RBI will step in because inflation is a tax on the poor and it would like to ensure that the poor are protected as much as is possible. The poor, of course, includes middle-class people like you and me and most of our listeners.
Now, RBI has also proposed to put in place a transparent framework for reset of interest rates on floating interest loans. Can you tell us a little more about that for the benefit of listeners? What are the implications for home buyers? Why was the need felt for this?
Right. So what has been happening is, as you know, many people take fixed interest loans from banks for their homes that they buy. But many others actually go ahead with floating interest rates because they hope that interest rates are going to come down. And so they take a floating interest rate loan. But more often than not, interest rates do go up. And when they do, there is a tendency on the part of the banks to have a stickiness on these loans. They don't come down as much as the CRR comes down. So that creates problems for the home buyers. They complain that CRR has gone down to 4.5% from say 6%, but my home loan rate, which had gone up from 10% to 12%, has not gone down as much. It has gone down by just 0.5%, whereas the CRR has gone down by 1.5%. So what the RBI is asking the banks to do is to ensure a transparent system which tells the home loan buyer that why his home loan is X amount and not Y amount. He has to explain to him that above the CRR, this is my administrative cost or these are my margins and therefore your home loan is going to be this, which is basically a warning to the banks that do not go in for sticky loan rate revisions. So that is, I think, a positive for those of us who are buying homes, who are borrowing money to buy homes. Most people do borrow money to buy homes. It's very difficult to just bank on your savings or your provident fund account to actually buy your home. So people do take loans and those loans have to be, after all, paid back. And that is why this interest rate stickiness is a problem for most people. At any attempt to solve it is really a good consumer-oriented measure.
Also, in its efforts to improve the digital penetration in the country, deepen it further, RBI has proposed to launch an innovative payment mode with conversational payments on UPI using artificial intelligence. How important and interesting do you find this development?
Yeah, that's an important thing because two things are happening. One, of course, our digital payments gateways are becoming stronger and better. The number of transactions through the digital mode is increasing. But at the same time, we do need to keep on increasing it because cash is still king in this country. There is a need to increase digital penetration. It helps sell more products. It helps the consumer because he does not have to carry around bags of money with him, creating risks for him. And at the same time, it increases the flow of the economy. The entire churn of goods and services and money flowing increases when you have digital payments gateways. And at the same time, this move that 200 rupees to 500 rupees for certain smaller transactions, that helps because inflation is going up and many things have become costlier. So this 200 rupees was really too small an amount. So these things are positives for encouraging the digital payment, for the digital economy to increase or expand within the country. And I think these steps should continue to be taken in an incremental fashion. We will continue to have a situation where digital economy will expand at a very fast rate. But of course, even simultaneously, the cash economy is not going to die down overnight. That too will continue for quite a few years. So it is going to be a side-by-side operations. But yes, the digital will find more space as time goes by.
Jayanto, you said a short while ago that India is a sweet spot in the global economy right now, which is going through a lot of turmoil and challenges. We are seeing in China, we are seeing in Europe, and, the major developed countries, they are facing a lot of challenges because of the pandemic, the geopolitical situation. And India has continued to be resilient and stayed a sweet spot. What about the central bank's actions? Because the other central banks, still they are increasing the rates, still they are in the tightening mode. Do you think the Indian central bank will also be an outlier and it will be either pause or cutting of rates at some point?
I think basically it's going to be, they will have a wait and watch policy. As I said, there are dangers on the international front. It's not honky-dory as yet. So if there is heightened commodities inflation cycle, then obviously we'll have to rethink our stance. But if there is no such great international push or our economy is growing at such a great rate that we are able to take care of minor inflationary spirals, then I think we will continue with our stance of not increasing the interest rates. The interest rates can be cut only in a situation where the RBI is confident that the inflation rate is at 4 or below. Then and then only possibly the RBI will consider giving a greater fillip to growth by cutting interest rates. Yes, interest rates cuts do help growth, but not always and not at every moment. And right now we are, as you said, in a very sweet spot where the economy is actually growing back, bouncing back from where it had hit during the COVID period. So even without the interest rate cut, by maintaining a policy of keeping the interest rates untouched, the RBI can ensure a very, very good rate of growth for this fiscal year. Will they still do something? They might. I think by winter it will be clear to the RBI where the commodity cycle is headed, whether they should take a much more aggressive stance of cutting rates, and I think they will do something in the winter policy of the RBI. That is also the time, that is an important time for most corporates because corporate investment decisions are taken in the first half of the year and actually implemented in the second half of the year. And that is the time when they would like interest rates to really, really come down. So let's see what really comes out in the next two policies that we have with the RBI. Only then we will be able to understand where RBI is headed and where the economy is headed upwards. There's no doubt about it. But by how much, that is the factor which we will understand within the next 4 or 5 months.
Jayanto, thank you so much for this comprehensive discussion and giving us your insight on the various aspects which were thrown open by the RBI monetary policy announcement today.
Thank you.
You were listening to a discussion on RBI monetary policy decisions. The participants were Jayanto Roy Chaudhary, economic analyst, and Sonu Sood, anchor. This program was produced and presented by the News Services Division of Akashvani. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may share your feedback about this program through email at airnsttalks@gmail.com or WhatsApp on 9289094044.